Hey guys, welcome to another edition of Crypto Lab with Alex, featured by Trading Analysis. So, as usual, we are going to go through the latest developments in the world of the macro finance. We will look a little bit what is going on the yields and dollar and gold, and of course, we will switch to cryptos. So leave your comments, or if you like, we see some cryptos for your preferred cryptos in the chat box, and also your comments in regards of the themes that we are going to go over through today. Geopolitically, as you know, the situation is still the same. We still have a war ongoing in Ukraine. Lots of commodities has been trading a bit lower, especially oil from the latest lows. Lots of activities in regards of US from the different sides to try to increase the oil supplies. And of course, we will see what is going on with the Fed rate meeting yesterday, or Fed meeting yesterday. They increased rates with a pretty hawkish outlook for up to, let's say, 2024 in rates outlook. So that will probably create a little bit more destabilizing environment. As you know, the mandate of Fed is to keep price stability and maximum jobs employment. So Fed is obliged to follow these two mandates, and as they explained, inflation has been moving pretty sizably on the upside, and also they see very close figures to maximum employment, so they need to cool down the economy a little bit. So we will see if they find the right balance. They are planning to hike next meetings, almost every meeting until the end of the year. All the meetings will be live ones, so they will be followed by the press conference, and we will see how the stocks will react, or will this action actually will put the economies, at least in US, into a couple of, let's say, or either half a year or a year recession. So market has reacted yesterday. So let's go over a basic couple of things that we usually look. So let's go and look what's going on a 10-year yields. One of the charts which are very important. And as I said yesterday, we had a members meeting at Trading Analysis with our stock service. I'm still not ready to give up this wave count. We are actually trading between two main resistance levels. This is one of the targets we usually look for the fifth wave development on the upside. When we count this as a ABC on the upside, also around 2% is equality measures. So I'm waiting to see what 10-year yields will do here at 2.2 to 2.3 range. If we see a break on the upside, I'm afraid we will have to leave this wave count and go for a more bullish wave count, and the rate might even jump up to 3.3%. Where is the next resistance levels? We are seeing a little bit of inversion in the yield curve, and that is always a very cautionary sign. And usually when you see a yield curve inversion, there has been a recession in the let's say 4 to 6 months in advance. So we will see how that will go. I'm gonna still wait for a possible signs of reversal. We don't see that yet. We are trading at 2.17. Rates didn't react so much yesterday because this was relatively expected. Jerome Powell has announced a rate increase, but his further dynamics with a possible outlook on the QT, or unwinding the balance sheet, will be presented on the next meeting. And of course, that is also a very affecting as a liquidity, and it is equal as the rate increase if they wind down the balance sheet. So in that respect, I'm still waiting what we are going to see here in the next couple of weeks. So in the European front, we have seen a pretty sharp reversal because ECB was relatively on the side in regards of starting to pursue the rate hikes on the upside. I still don't think that is sustainable because the European economies will be, I think, hit the hardest with the ongoing sanction with Russia, also with a wave of refugees from Ukraine. But looking at the demographics of Europe, I think that will be assimilated in the next year or two. But in general, with the higher gas and oil prices and Europe trying to switch to a lesser dependency or even no dependency from the Russian oil and gas, that will need to actually pass an adjustment period, which might be even 3 to 6, even to 10 years. So I don't think this is actually sustainable. I do see a next a more deflationary levels on the upside coming. As long as this support zone holds, we can also count this as a more complex manner. Triangle has been negated for now from the last week's presentation, but I still don't think that this is impulsive, and there is no sense, I think, in my view, that with such a debt loads, of course, in the peripheral countries and also in the main countries in the Eurozone, post-COVID, also we have a current commodity boom on the upside. Prices is increasing everywhere. So I don't think the sustainable rates on the upside are going to be seen in Europe. So I do expect this to stay within this boundary and in one moment even to go in a deflationary fifth move on the upside. As the dollar is concerned, there has been a couple of things. We have to approach the dollar a bit more carefully. We will look for a possible reversal and the dollar moving lower. This level still holds. But as you know, dollar is still a reserve currency for now, and we have seen a fast unwinding of this dollar reserve status because many countries in the world, I will not say many, but a couple of large countries as well as BRIC countries are starting, and this process has been ongoing for the last 10 years to get out of the dependency on dollar, especially since it was used as a kind of a weapon in this current situation. So we have to be careful in a sense because dollar usually got beat with several reasons. One of the reasons can be rates, and that of course has been priced in at least in the next couple of months. But the next reasons also, if the things escalate, hopefully we will not see that. Dollar is also still a safe haven currency, so we might see even this forming in some type of a triangle and continuation on the upside. That will, of course, will not be welcomed either by US to a certain degree or the EEM countries. Lots of debt in the world is denominated in US dollar, especially in the offshore dollar markets. So if we see a correction in 3 waves and a continuation on the upside, I think Fed will definitely offer some additional liquidity to actually try to tame dollar lower and increase the quantity into the system, and especially into the offshore dollar system. The same thing Fed actually on a little bit different way has done here when the COVID started with the swap lines offered to foreign central banks in an attempt to actually cool down the dollar. They rates were actually slashed to zero, and the swap lines was offered to actually provide liquidity in the beginning of the COVID crisis. So I'm still on a kind of a defense here, looking what is going to happen. We are still holding some of the key levels that I have been looking for many months before. So 786 retracements are still holding. It comes around 100. We are not far from there, as you can see. So if my wave count on the previous observations is about to hold, this will be just an ABC pullback, and this will be followed by a 5-wave move actually going below 94, and then even these levels at the 92, and that will be a relatively sound sign that the dollar is turning lower, and we can expect actually in the next couple of years dollar lower. If we get only 3-wave moves up to support of 94, 95, we can basically make the case that the next turnaround might be possibly on the upside. So I'm gonna stay kind of juggling between these two wave counts because the situation is new. We are dealing with unprecedented reaction in commodities for the last, I don't know, maybe 10-20 years, and we have to be careful also from the geopolitical risk not to switch and to pick a side because currently actually the situation is very unclear how the sanctions and how long the sanction will be, what will be the final solution for Ukraine, will the crisis will spread, or actually it will be contained and the solution will be actually on the table soon. So I will not make myself to be directional yet on the dollar until I see any developments on the downside in 5 waves, or even more on the upside if we see only 3 waves pullback and then a continuation further towards 104 to 108 levels on the upside. So in that respect, we can also look some of the currencies, and also we can look gold and silver. And as I mentioned a couple of streams before, gold is pulling back sharply. If this turns out to be a 5-wave move to the downside, you can actually freely look gold lower towards back to 1,600. Because we only made $200 on the upside in a crisis of this magnitude, and I was really wondering what's going on with the gold and why gold is not trading at 2,500–3,000 in such a pretty messy situation. And as you can see, we were not able even to cross the previous highs. We traded as some type of a double top here and then reversed. So watch here very carefully. If this further starts to move and breaking these levels, I think gold will become bullish on the upside. But as long as we trade, and this type of reversals are never handy for the trend continuation. So if we see a 5-wave move down on a pullback, definitely I think that the dollar will actually surpass and go even lower from this 1,674 support. This will be some type either or a flat in 335, or it will be WXY in 3 waves. But anyhow, both of these versions of a possible formation of some Elliott wave patterns will actually call for a gold to go lower rather than higher. So again, I was very surprised by how the market reacted in this very, very heightened risks in regards, especially in the first 2 weeks of the Russia-Ukraine war. And actually, it was able only to do $200 on the upside. And that was really stunning for me, what's going on with gold. And as you can see, we dropped from 2,669, and we are trading now below 1,950. Same situation with silver. Silver didn't progress on the upside much. We have seen a pullback on the downside. We poked this trend line on the upside, and then we came back. Now we trade around 25, 42. So same thing. this can easily can fail and go to this 200 moving average on the downside, back to 1918 levels. In this stage, we still don't see any decisive five-wave move on the upside. As you can see, we only see three waves, and if this starts to further go to the downside, I think it will actually go further lower. So we are kind of in a mist, no man's land in the gold and silver, and I do think that dependent of what we are going to see in the next couple of sessions, we will be able to outline more precise paths for these two. I don't like to be in this moment on any side in regards of bulls or bears, because I see cases for both, and until we see some signs, we will have to watch these dynamics actually unfold as the market dictates, without any kind of predictive narrative, in a sense that where gold and silver will go, until we see some defining patterns forming. So I would like also to address a couple of currencies which I think that might excel in the future. So definitely what I'm watching is commodity currencies. I still don't know what will happen with euro and the dollar, but one of the things I'm looking is definitely Aussie dollar and New Zealand dollar, which are also commodity-based countries, with the commodities moving up and potentially going to stay elevated in the next year or two. Most likely this pattern from the lows in Aussie dollar, you can count the 5 waves up, and this is some type of a retracement. I don't think this retracement is still done. I do see if actually stock markets move lower in the possible recessionary scenario in the next 6 months, we might see Aussie dollar a little bit more lower, and then I think this will definitely be an ABC pullback. I'm still watching what's going on here, and I do see a possibility Aussie really going further pretty sizably on the upside after this correction is over, at least in a which will be this wave structure. This will be a B wave, and this will be a C wave. So equality is really a couple of thousand pips on the upside. So I see Aussie dollar pretty bullish when this correction is actually done. And also the same thing we can observe in the New Zealand dollar. Maybe correction even here is already done. This might be look like a leading diagonal, still not enough of the price action to actually determine here, but definitely from the support levels we are creeping higher day by day. So I also do think that even New Zealand dollar, even if this is just a correction, we go a little bit lower, has an upside potential after this correction is done, or after we see 5 waves up. So my attention will be focused on the commodity currencies. Euro dollar is still unclear, depends on what the dollar will do. And also there is a couple of more which are signaling that potentially we might see a downside in the stock market. So Aussie Japanese yen has now a distinctive 5-wave sequence unfolding, from where you can see a 3-wave pullback. So that is showing a possibility of the risk-off environment, because Aussie yen is sensitive to the risk-off environment, and also that will agree with the Aussie dollar going a little bit lower if the stocks reverses from some levels and post the new lows. Definitely you can see 5 waves unfolding. Wave 4 didn't enter the territory of the wave 1. This is a triangle, so in triangles you are looking for the wave count invalidation, actually where the wave 4 will finish. And as you can see here, E wave finished well above the invalidation level. I'm also observing dollar yen, which has reached some of the targets we have been looking, maybe a little bit more upside, but the overall chart still does not suggest we are going to continue on the upside. It's possible, but I do see a strong resistance levels, and any sizable reversal will actually agree with the dollar going lower. So we will see. This has been 4 or 5 years of consolidation here in dollar yen, 5 waves up in wave A. I also have some longer term charts. I usually publish them on my Twitter. So in that respect, I do see this not so impulsive on the upside. From this sequence, I see this as a 3-wave move and a large correction in the X wave, and I do consider this a Y wave, so a complex correction in the B wave. So I'm very curious to see what the dollar yen will do here. Any 5 waves down with a pullback will definitely increase probability we're going to continue lower for the next year, and from there we're going to see a sizable reversal on the upside. To sum that up, rates still not visible for me. I'm waiting to see what we will see on these levels. Gold and silver also, I don't see any appetite for markets to continue buying gold, at least for now. And some of these currencies, especially commodity ones, has the wave structure which indicates that in next cycle, probably when this correction is complete, will go sizably on the upside as well. As we can see, some of the yen pairs going initially now, but the patterns might be finished soon, and we can see pullbacks, which actually calls for prolonged correction in the stock markets as well. So let's see how that will play out in the next crypto lab. So let's go and revisit cryptos. I have posed a very interesting question on a Twitter today. This is the total crypto market cap, and as you know, we follow and track this chart very almost every time. We are still moving sideways, but as I said on my question, what will be the next impulse or the next trigger to actually put a couple of trillions additionally in the total crypto market cap, and from where it will come? If anybody has idea or an answer, please put it in a comment. So I ask all of my Twitter following to try to actually answer this question, because I think this question is very very important. People are calling and has been calling some insane levels for Bitcoin and cryptos and total crypto market cap. As you know, here we were basically in a one-man minority here in March 2021 when we said that market will go lower. 99.9% of the market was actually calling for much higher prices in Bitcoin and total crypto market cap, and I called that being blinded by the sentiment. The same thing happened in November, and the call was actually 100K towards the end of the year, and total crypto market cap on the upside. We have recognized a possibility of a 3 waves down, and we are now trading around 1.8 trillion. So, in order to move this market on the upside, we need to know and kind of at least meditate on this question from where the money will come from to actually fill this all buying. Definitely the retail space will not be so significant, because higher inflation cost will actually make the income less available. So I will not count on the retail to produce anything sizable in the next year or two until these inflationary pressures are tamed and start to go lower. Of course, the only question is why the institutions on the broader base will actually enter the cryptos. So I have a couple of thoughts on that respect. And I'm looking these two levels. Of course, I'm still looking here as in Bitcoin as a triangle. And if we break these key levels, I look this as a flat. So simple as that. I don't have many wave counts, and these wave counts, especially the triangle one, is still working. So no need to change it or to add any new mumbo jumbo on it. Yeah, interesting question. So I will throw you a couple of teasers next time, and I will go a little bit more in deeper into these questions and from where I think money can come from to actually produce this move on the upside in the Bitcoin and the altcoins, and actually push the total crypto market cap on the new highs in this environment, which I will say, if you look at it, does not correspond so much well for the, especially from the next Fed meeting, when they're going to start to withdraw liquidity. I call that psychological liquidity. It's not actually liquidity, it's just unwinding their balance sheets with um, bank reserves and actually maturing bond without any add-ons on their balance sheet in the next couple of years. So good luck with that. We will see how that will go. But narrative of the current environment and of course geopolitical situation, it's not so favorable, I will say, in the usual relation like risk off, risk on for cryptos. So we must think from where and why the institution will actually switch at least for some period and start to buy Bitcoin. It will be a temporary inflation hedge, or it's going to be a yield vehicle because stocks might be going sideways or a little bit more downside for some period, or it will be another global event in finance, some type of a bigger crash or a geopolitical uncertainty where actually we will see the bigger inflow. So we will see that. So CoinDesk news, nothing special there. We have witnessed a new initiative from the US government to actually look for cryptos in a more kind of a favorable side. So that's good. Also in Europe, there has been attempts to actually limit some of the crypto developments, and that has been overthrown for now. And there has been discussion in regards of right now in the Congress, as I see, there is a digital assets and illicit finance hearing in the US Senate Banking Committee. That will be interesting what they will actually find as a conclusion. Let's switch to the Bitcoin chart and let's look what's going on a Bitcoin. Not much has happened. Actually, during this ongoing crisis, Bitcoin has been pretty much still moving sideways. As you can see, I still have a triangle, and basically my wave count doesn't change, as you know, in a sense of the overall wave structure. There is, if you look on a daily chart, the resistance levels on the upside are at 50K, whereas this 200 moving average. I still look this as a prolonged possible WXY or some other form. It really doesn't matter in that sense when you have a primary target. Definitely, I would not like to see if we see a move below, a sizable move below this below this 28,880, which is actually levels of the wave A, because then triangle is invalidated and we have to look for a lower level. So I still think we're gonna stay within the borders of this triangle. Bitcoin has been behaving pretty good with this type of environment, and as you can see also from the weekly perspective, this 200 moving average has been keeping Bitcoin pretty nicely on the upside. 2017 low, 2020 low, 2014 low, 2015. So if we go below these levels, I think even in the worst case scenario, 20K, as I showed a couple of times, has a sizable levels here from a different perspectives to actually hold and develop a new bull trend. So I'm going to keep a triangle as long as it's not invalidated. We are, as you can see, still trading water here, or as my fellow co-worker Terry is always saying, we watch temporarily how the grass is growing on cryptos. So we are definitely watching the grass grow for the last couple of sessions or 2 weeks. We are trading sideways. This looks like some type of a triangle with a possible outlook to lower side. So we will see that, but overall, I still think we are most likely in a bigger triangle, and I expect to see what the Bitcoin will do around 30 and 29K if we continue a little bit lower. If we continue higher, we'll have to switch and label this as a D wave, especially if we trade above this 200 moving average, which comes around 48.50K, but then we will see an E wave on the downside, which will be a kind of a nice entry for me on the upside. So I'm still observing. This is not very tradable environment. As you can see, most likely you will only lose your funds if you trade this type of sideways consolidations with the possible surprises on the downside and on the upside. It can be brutal, and you will not have much time to react. Also, Ether, pretty much the same. I didn't change any outlook on Ether as well. I do think we are in some type of a sideways consolidation. RSI on weekly is still trying to get to these lower levels from where we have seen this nice, pretty upside follow up in Ether. I don't think that the uptrend is done. Especially if you look the price action from March 2021, it is not still directional to the downside. It is still not directional to the upside either, which actually suggests we are in some type of a balance between the bulls and bears, which is usually depicted by a triangulation or some more complex corrective pattern, at least in the Elliott wave methodology. So I don't see much of a important developments there on Ether yet. One of the interesting thing which we point out to our members is that a couple of altcoins has reached our target. One of them was Aave. We have watching this wave count for a pretty long time now. I have posted on my Twitter page. We have actually properly identified this B wave on the upside. So in the latest development, so as you can see here, actually this move on the upside was here, and I was considering that to be just a pullback with a reversal on the downside, and I posted the picture there with the target. So we are now at that targets, and we have seen with the news of enhanced network in the Aave ecosystem, a pretty nice bounce from these two couple of very sizable ratios. So what we have here, we have equality from this WABC on the downside, and we have also 0.618, which is actually a ratio from which we determine the W triangle XY target. And as you can see, we landed almost exactly there in this zone. I did label this as a fourth wave in Aave, because the overall chart is showing that this is just a sideways consolidation. But to confirm this, we need to see clearly a 5 waves up above this triangle, above this channel, sorry, and then a small pullback to have a reason to actually, with a small risk reward, small risk and good reward, to actually pursue some longs on the upside. But just a word to mention, that from these levels paired with news, we have seen a nice reaction on the upside. Also, I have seen, looking through the charts, some of the levels which we have been observed for a couple of cryptos actually reaching their destinations. So Serum also, I think, should be pretty watched, pretty should be on the watch list. I do see a 5 wave, not yet finished, but a little bit more downside, but we are coming close, I think, on Serum, because if you count this as an impulsive move, which I do in a wave A, and I anticipate when the potentially Bitcoin and cryptos goes up, that Serum produces a B wave. Overall, longer term, this is a bullish chart, because longer term, I mean couple of years, because this is a leading diagonal with a rather unusual, I would say, unusual pullback. If we see an ABC, usually when you have a leading diagonal, you should see a pullback down to this previous fourth wave and then a strong reversal. So I find this situation a little bit awkward, but nevertheless, even if I'm not right, you're going to see a pullback or a continuation, it doesn't matter, because there is a clear 5 waves down developing here with some possible targets a little bit below the current levels. Binance Coin and Matic is still holding good according to our wave counts. If you want to see more of our work, you can visit Trading Analysis website for a possible trial if you want to be with us. Yeah, Matic is still working fine, either a triangle or a ending diagonal here. I do see this as an ABC in a fourth wave and a further expansion on the upside. So still in a sideways price action, which is good in my opinion, which Dogecoin still didn't reach our levels, but it's close. We have a little bit more downside, as you can see. We have been bearish on Dogecoin since beginning of March 2021, emphasizing this fourth wave correction, trying to kind of a pinpoint. So I think reversal might happen from this 0.04 to the 0.08 levels, 38% retracement from the wave 2 in this wave 3 on the upside comes around these levels, and 50% are a little bit lower with the previous fourth wave act as a support. So I do see a possibility a little bit lower that we see some reaction on this meme coin named Doge. So yeah, so that will be it for me, just to give you a flavor of what I'm looking in the macro space, which is a little bit undefined in my opinion currently. Of course, the stock market will show us, and of course, the bond market will show us what they think about developments in the next 6 to 1 year period. And cryptos, as you can see, I see some potential lows, but they need to be confirmed in some alts, and also Bitcoin is holding well. If the stocks move lower, potentially Bitcoin can do for some time also follow it, but I would like to see some type of decoupling in that, because in this instance, especially in an inflationary environment, I think Bitcoin might be a little bit more favorable to have, especially if the dollar starts to move lower. And in that respect, I will not say that this will be due to Bitcoin dollar correlation, which I think it does not exist. I mean, it exists, but from time to time, as well with stocks, I think that Bitcoin will be perceived as a kind of inflationary hedge and store of value for keeping your net worth in a sense of possible devaluation on the dollar. So let me see your comments and suggestions. So Jamestown Veki saying, Zdravo Alex, hi Jamestown, hope you're feeling well, looking forward to a good presentation. I hope it has been reasonably good, I hope. Schnitzel, always Schnitzel, which is I think of a Serbian origin, Desi Schnitzel, si dobro. SC Strategies, good morning to you. Pamo, good Alex, hope you're well. I'm fine. I think that spring is coming. I'm looking forward to a little bit more sunnier weather. It's not like that in Serbia currently. We have a little bit of rain for the last couple of days, but I'm looking forward. The COVID passes are cancelled in our country, so we can freely go after 8 o'clock into pubs and theaters and all other stuff. So finally we can move more freely, and I'm looking forward to that. A leading diagonal interest rate, yeah, possible. I will not discharge that, Felix, with this inflationary. If inflation starts to surge even higher, definitely it will be possible that rates will spike, and then I will never run from that. But I'm waiting the key levels. For me, I need to see some of the patterns and levels to break in order to switch my view and starts to be more bullish. Okay, so Zach, hi Alex. Darvidas say, hey Alex, thank you for sharing your Elliott wave knowledge. Nothing, I usually do share it much more than I should share it, as many people are telling to me, but what can I do? I'm very passionate about it, and after 12, 13 years in it, I'm also like to transfer some of my knowledge and experience if anybody is interested, of course. Could you teach us how time frame management when doing Elliott wave analysis? Yeah, my thought process in the Elliott wave analysis is I usually start from example, from the higher time frames. I don't go too much on the smaller time frames because the uh, why Elliott is so misunderstood. I will explain you that now. Actually, if you look the structure of the patterns with its variations, you will notice that ABC or a zigzag is one of the fragments which actually is contained in all of the subsequent variations of any Elliott wave pattern. Okay, so that's why you see in some moments the pattern can morph, and people do object why the Elliott wave patterns when you do some type of a prediction, or for example here you have this as a flat and 3 waves up in a B and 5 waves down in a triangle, which is actually invalidated above 42K as a 5th wave down. So this will be actually some type of a running flat, not the expanding one. But the 3 wave move you can find everywhere, and that's why some of the patterns morphs, and people usually object, why did you change your wave count? Or but this flexibility I think is very good. So for me, Elliott is a risk tool much more than forecasting tool. So I want to know where I want to have an exposure and how much that will cost me, and Elliott provides a great tool for that. You need a lot of knowledge and practice, and also you need to kind of marry a fundamental and technical side. Of course, I don't look only Elliott. This is my primary tool. I look fundamentals. I look the overall macro environment. I do look support resistance levels, some of the RSI, 200 moving average, but these all are secondary. Okay, so I just kind of form a picture. So I start my wave counts always from weekly level, okay, to see the overall pattern, and then I drill it down to daily 6 hours. And usually when you swing trade, you want to trade from daily up down to 1 hour. Below 1 hour, there is not much sense if you're not day trading actually to go and look, because you can see a much more noise and morphing of the patterns, since on the lower time frames the things changes quicker, and on these bigger time frames you will not see that changes, and patterns will not that easily morph from your potential outlook. So that's why I think it's better to keep yourself on higher time frames for the greater visibility. ADA has reached our target almost, so we do see this as a potential fourth wave, and I'm not sure, to tell you honestly. This looks very impulsive to me, but I see anyhow from these 0.62 levels, because there is a very nice fib levels. Even if you count this impulsively, these lower levels will be that one. I do think at least you're going to see ABC pullback back to 1.6 to 2. If not, you're going to see a full 5-wave sequence if the crypto starts to move on the upside. Okay, so I think we are coming to crucial levels for at least some type of a bounce in ADA from 0.6 to 0.74. Okay. So let me see. Would you like to look into algo and sushi? We looked phantom, dollar, Turkey. Still, I think more upside for dollar. Don't know where the money will come from. Maybe institutions with regulations become more key. Yeah, but that's the institutional regulations. That's a very long time frame. You know. It has to be a really drastic change in the um, law regulation and also the environment where the big institutions will be willing to go in. Okay, probable, but I will not say it's not so likely in this span of period that we look like. But it's definitely one of the things which might change the outlook, but it really has to be something big and drastic on that respect. Okay, so Jamestown looking to ride along the institution. Yeah, sure, always good to be where they're going. Silver not following the gold move narrative. Yeah, DB, I don't dive in too much. I mean, the wave counts is not so important to me when you have unclear situation. Usually, I wait. I don't. I'm not playing the guessing game. With Elliot, many people tries to like decipher what's going on, and by experience and many years in that, I found that effort really futile. Because you don't know. I mean, it can be three waves, gold can collapse down to 1,500. You still don't have visibility. Therefore, when I don't have visibility, I go to other charts when I have visibility. I don't care what's going on gold or silver until I recognize something and I can build something on. Otherwise, if I don't recognize it, why should I bother with guessing game when it's almost impossible to do so? So I have no idea for now what's going on there. I just noticed, which was, as you can see, very fair noticed last time, that gold should be much higher than it is. Okay, shorter term Bitcoin chart, no idea what's going on. Possible triangle, possible move up, no idea really. I mean, it is a sideways consolidation. We pick a side. We can go up, we can go down, depends on a couple of factors. In the great scheme of things, not really so important. Rune, okay, let's look Rune. Or Torchain, what's going on Torchain? This is dominance. I think it has been going in our direction. We looked at on the members webinar, and yeah, it is going nicely on the upside. We have looked for a possible consolidation either in an ABC or a still prolonged triangle. Both are still possible, but having this as a shorter wave too, most likely this will be the end, and we might see a nice 5 waves up and a pullback, which will open the door for a further upside. So it's a, for now, decent chart, but it still needs to develop. Copper, same thing. So I think copper, I didn't look so much copper. Let me see what's going on there. Definitely will continue on the upside. This doesn't look so bullish for now, but the overall chart, I think it looks bullish. So depends what the stocks will do. If we predict a recession for some time, copper might just have a little bit of pullback and then move on the upside, but it's going to be a wanted commodity. And if the Aussie, which is also tracking copper pretty nicely, goes a little bit lower with copper, I will say they will match somewhere around here, and then in unison they will continue on the upside. So I'm going to stay bullish on both of them for now. Okay, guys, so yeah, usually I do that Zench. I think it's very useful. If let's look curve CRV, and that will be it for today, guys. Yeah, I still look this as a potential move down, maybe correction in the upside. This was my chart. I think I published that on Twitter. So I do see this as some type of a 5-way move. You can argue this is also a 5-way move with a 335, but we are still not there. So I do see this as a possible soon reversal in A wave, and then we will see if this starts to be a 5-way move. Then we can relabel this, but currently I like it more as I see this as a 5-way structure completed with the wave A, B, and C. But definitely I do think that looking this wave count with a little bit potentially more downside, we are approaching some levels where we can see a sizable bounce. So 1, 2, down in 3, 4, this is maybe an ending diagonal, still incomplete. So you might see a little bit more downside until this finishes and actually post some tradable lows with the 5 waves up and a pullback in a B wave. And let's go with the ABC until we see how this will develop. If we see a 5-way move instead of a 3-way move, this might be something you can actually anticipate for the further move on the upside. It's a partial. I mean, with Elliott, you always need to do and not jump to the conclusions. You have to be very careful observing and be partial and wait for confirmation, looking the key levels. It's a very active methodology. You cannot sleep. When I look at the markets and try to look what's going on, I always ask the questions, what's going on, what this can be what is happening, what if this situation is actually, when I'm of course drawn to a certain chart. If I don't understand the chart, I don't bother. So it's a very active methodology. It's not just you put a wave count and you go to sleep. It's not like that. Okay, guys, so thank you on the attention. Of course, click the like button, subscribe, share the video. Our membership on the YouTube is slowly growing, slowly, but it's growing. We are looking forward to more, of course, viewers and discussions and questions. As I said, I have tried to bring a couple of guests, but they didn't answer me on Twitter. I have sent DMs. I will keep trying. We have a couple of guests always with trading analysis, which we knew, but they're from the stock more precisely equity side of things. From the cryptos, I don't know why people don't look their DMs. I will definitely like to make some and bring some guests either from technical side, which has a little bit different outlook than me, so we can discuss it, or from the fundamental side, but nobody's responding. So if you know somebody that it's good, I will keep sending DMs. If they're looking now by any chance, DM me. I would like to have some guests on this show and raise a couple of questions and discussions which I think are important for cryptos. So see you guys next week. Pamu Luna, I think it's an ABC pullback. We have been on top of this chart for the recent developments. I still do think we have a little bit more downside. So we see you guys next week. If you are not going to join us for a trial or for membership at tradinganalysis.com, be well and trade carefully in this environment. Measure things twice and your risk. And see you next week, guys. Bye bye.